So let me quickly to have a conversation with you about Webull versus Robinhood versus M1 Finance. I'm giving you an in-depth, brutally honest review. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Securities Show. How are you today? I hope you're all doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I'm just going to do a quick compare and contrast between those three players, Webull, Robinhood, and M1 Finance. The thing here is that free investing apps have taken the world by storm since Robinhood launched in 2013. It's hard to remember for some of us, but free trading was largely unheard of back then, and Robinhood was a pioneer. However, since 2013, multiple new apps have launched, which is why we have decided at the Sweetie Kiwi Show to do a comprehensive review of three of the biggest players, Webull, Robinhood, and M1 Finance. These investment apps largely cater to millennial investors thanks to their sleek trading platforms and low fees. Very important, low fees. So when we actually we were digging into Webull, Robinhood, and M1 and analyzing the features, we found benefits that we were not necessarily expecting. For example, the ability to trade in low-cost exchange-traded funds, in-depth analysis and trading tools, new investing strategies such as pie investing. That's fantastic. So how much money do you really need to get started? Shockingly little. Thanks to micro investing apps like Acorns and Stash, you can kickstart an investment portfolio with small amounts of money, just your spare change, in fact. Acorns, for example, sweeps a linked credit or debit card account, rounds up purchases to the nearest dollar, and invests the change. Stash offers a similar opt-in feature that rounds up purchases to deposit money in a user account. Fantastic. So beyond the micro investing apps, the amount of money you will need to begin investing after you open your account depends on the asset you intend to buy. So individual stock shares range from as little as a few dollars to hundreds or even thousands of dollars per share. And mutual funds often have minimums of $1,000 or more. But exchange traded funds, the ETFs, they are essentially mutual funds that trade like a stock, and they can often be purchased for less than many mutual funds. So don't forget too, though, that some brokers charge trading fees every time you buy or sell an investment. But the good news is that there are many brokers who now offer free trades. So before we get into the nitty-gritty here, please check out this short investment evaluation approach video. We actually have a strict approach here at the Sweetie Kiwi Show when it comes to analyzing, categorizing, and reviewing all the players that we review on this show. Check this out now. All right, let's get into it. I first want to talk about Webull. There are some major differences between the apps. So let's talk about Webull. Webull was founded in 2016 and they serve a clear audience of advanced traders. With Webull, we're talking advanced traders. Out of all the three investment apps, they provide the most thorough suite of research tools, including 50 technical indicators and 12 charting tools. On their website, they actually even state that clients can configure the trading panel as they like to discover trends and potential opportunities for their own investment strategy. So the platform is one of the best for getting real-time market data to inform investment strategies. So while Webull does offer a lot of advanced features, it still offers the basics to benefit beginner investors as well. So Webull has a wide variety of stocks and ETFs to choose from, all with $0 commissions and no trading fees. Fantastic. So let me give you some details here. So the core pricing, it's free. There's no fees. There are no fees. Minimum deposit, none. Type of investment, stocks, ETF, options. Account types, you have brokerages, IRAs. Security, they are insured by the SIPC. Sign up offer, there are 2 free stocks. And what are the pros and cons? The pros: free trading, so commission free trading, advanced platform, great for day traders and active investors, and paper trading, so the only platform to offer simulated trading. What about the cons? It can be overcomplicated, so beginners might find the platform cumbersome to navigate, and there's no cryptocurrency yet. Although Webull does say that this feature is coming soon. So one thing I want to say here is that one of the coolest features that Webull offers is the paper trading through its free trading simulator. So you can simulate various trades to practice without risking any real money. So for someone new to active trading, options trading, and short selling is definitely worth considering. While paper trading sounds fun personally, it's important to understand that you have other low risk strategies of long-term investing, such as ETFs and index funds. All right, so that's fantastic. One thing I also want to say here on Webull is that they do offer extended hours for trading and margin trading, but borrowing money on margin comes with a cost. Let's now talk about Robinhood. Now, Robinhood, everybody knows Robinhood now. Last year, around April, with the pandemic, people heard about the app for the first time because of the saturation of their platform. But Robinhood, founded in 2013, is actually the original zero-fee investment app offering free trades, stock trades, and ETF trades to the masses. And Robinhood's platform is geared more towards beginner investors looking to invest in the stock market. And however, it's growing to offer more features to actually compete with large brokerages. And what are those features? We have a cash management bank account, fractional shares, options trading, extended trading hours. And most importantly, when it comes to Robinhood, you have to understand that they are known for their commission-free trading and sleek, easy-to-use investment platform. Very, very easy to use. Let me dig a little deeper here in terms of the details of their offer. So core pricing and fees, it's free. Minimum deposit, none. The types of investments you can expect with Robinhood: stocks, ETFs, options, and cryptos. They do offer cryptos, unlike Webull as of right now. And the account type you can expect is a brokerage account. And in terms of sign-up offer, you have a free stock bonus. So one feature that sets Robinhood apart from the rest is that they offer the ability to invest in crypto, right? It's the only traditional, and here I use the word traditional in a very precise way, the only traditional brokerage account in which you can invest in cryptocurrency, to our knowledge. And if you were to invest in crypto, you want to do it through Robinhood. In addition to that, by upgrading your account to Robinhood Gold, you will gain access to margin trading. One thing I want to say here is that please remember, folks, margin trading is very risky and not ideal for beginner investors. You need to know what you're doing first before getting into the margin trading game. What are the pros and cons of Robinhood? The pros: free trading, so commission-free trading, modern platform, it's easy to use and navigate for beginners, and cryptocurrency, so the only platform to offer crypto trading. What about the cons? You have bare bones platform, so the platform sort of lacks in the details in some areas. Again, they're trying to fix that. They're trying to actually up the ante, up the quality, and sort of cater to a more advanced audience. Right now, they're focused more on beginner audience, but they're actually getting there. So the third company we are reviewing today's show is M1 Finance. M1 Finance was founded in 2015 and is one of the few hybrid brokerage accounts on the market. So it is actually a hybrid account because you can choose to take a passive robo-advisor approach, invest in your own stocks and ETFs, or do a mix of both. And this is made possible because of M1 Finance's Pi investing strategy. In simple terms, with M1's Pi strategy, you set your asset allocation and your funds automatically invest into this desired allocation. All right. And M1 Finance, let me explain to you a little bit about the M1 Finance Pi investing. So for a simple example, let's say you set your desired asset allocation to 50% in a bond ETF and 50% in a stock ETF. So using this pie, when you invest your first $100, it will automatically invest $50 into each section of your pie. So you don't need to allocate $50 to the bond ETF and $50 to the stock ETF. You simply allocate $100 towards your pie, and the money is automatically dispersed to the proper investments, right? Sounds good. Now, it's a nice setup for passive investors because it's kind of it's just passive. It's just very simple. However, it can be complicated, but it could also be helpful in two scenarios. When you have a complex asset allocation, say you want to invest in bond funds, stock funds, and many individual stocks. So instead of doing the math and purchasing each one individually, you simply invest in your pie and the math is done for you by M1 Finance. And when your asset allocation needs to be adjusted, so using the 50-50 example that I just gave you, if your stock fund takes a nosedive down to $30 and the bond fund rises in price to $70, you wouldn't invest your second $100 the same as you did your first, right? Instead, you would invest more in stocks to right size the 50-50 relationship. So with pie investing, this rebalancing is done automatically for you. What about the prices, the details of M1 Finance? It's free, core pricing and fees free, minimum deposit $100, types of investments, stocks and ETF, account types, brokerages, IRAs, and trust. It's SIPC insured, and sign up offer $10 referral credit. And in terms of one thing you have to understand is that the pie investing strategy is great, but one downfall with M1 Finance is that it does not offer automatic tax loss harvesting, which is a commonly offered service for many robo-advisors. All right. So that's something you have to be aware of. If this is important for you, you have to think about it. And what about the pros? You have commission-free trading. They have a unique pie investing strategy, great for passive investors, and is a hybrid platform. So the only platform to offer both passive and active investing options. And on the cons, there's no tax loss harvesting, and is limited to one daily trading window. So unless you upgrade to 2 windows with M1 Plus. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of this compare and contrast between Webull, Robinhood, and M1 Finance. Let's now talk about it. Let's go a little deeper into the comparison here. Let's look at the fees and cost. Webull, you have commission-free trading. Same for Robinhood and same for M1 Finance. So all three accounts offer commission-free trading on stocks and ETFs. However, it's good to review each platform's pricing in detail because in some cases, there are various transfer fees, bank fees, and inactivity fees to be aware of outside of trading fees. In addition, as I will talk about later on, Robinhood, Webull, and M1 Finance all offer margin trading, but with a cost. And all three platforms also pass along both an SEC fee and TAF fee. Now, TAF is the trading activity fee. Typically, these fees are very small, but you can learn more about them when you go to the SEC, and if you just want to have more info about them. What about the investment accounts offered? Webull offers brokerages and IRAs. Robinhood only offers brokerages, and M1 Finance offers brokerages, IRAs, and trust. All right, so we kind of like the fact that M1 Finance and Webull both offer a wider variety of investment accounts with both taxable and retirement accounts available. That means you can open a brokerage account, traditional IRA, or Roth IRA, as well as a few others. With Robinhood, you can only use their taxable trading account. What about investment and asset class options? With Webull, you have stocks, ETFs, and options. With Robinhood, you have stocks, ETFs, options, and cryptos. With M1 Finance, you only have stocks and ETFs. So Robinhood actually offers it. Robinhood is the winner here because they offer the widest variety of asset classes and investment vehicles for you to invest in. So their addition of cryptocurrency trading is what sets them apart in the investment options category. That's really, really important. And this is important to know though, that while all three brokers offer the ability to trading stocks and ETFs, none offers the ability to trading index funds and mutual funds. So while disappointing, they all offer high quality ETFs that match broad markets with low fees, which is usually good enough for most passive investors, if you were to ask me. So what about trading platform and ease of use? So Webull is great for advanced traders, Robinhood is great for beginner traders, and M1 Finance is great for passive traders. So the bottom line here is that all three platforms are sleek and user-friendly, but there are some distinct differences between them in terms of the target audience, right? So with Webull, you have because they are best for advanced traders and day traders, they offer real-time charts, technical analysis tools, and the most robust stock research tools of the three. Robinhood has a bare bones mobile app that is easy to navigate, but sometimes lacks vital information. All right. And one thing we have been seeing in our research is that Robinhood does not show the expense ratio on ETFs, for example. And M1 Finance is unique in that it offers pi investing. So that's pretty cool, right? What about customer support? So Webull, you have to contact them through it's via email. Robinhood, you got to go to a contact page, and M1 Finance, you have to go to a support page. The thing here is that if you are trading with a low-cost financial tech company, the fintech companies, they there is no human element here. All three online brokers offer an in-depth FAQ page, but make contacting a human a little more difficult. Although it is possible, and we actually have tried to reach out to them, it is complicated. One thing we have seen is that Webull was the easiest to find a customer service email, and with M1 Finance, we couldn't find any info outside of social media handles. What about securities? All three companies are SIPC insured, no problem. And this insurance covers up to $500,000 and include a $250,000 limit for cash. All right. In addition, all three brokers are members of the FINRA, so the Financial Industry Regulatory Authority. And again, this is a standard, and you shouldn't consider anyway a broker who does not meet the standards. All right. What about margin trading? Now, margin trading is offered at Webull, is offered at Robinhood through Robinhood Code, and is offered at M1 Finance. So all three brokers allow you to invest on margin, but they all charge different prices to do it. Remember, investing on margin is a risky, advanced trading strategy that should likely be used only by experienced investors. So Webull offers the ability to trade on margin but charges a tiered interest rate depending on how much money is in your account. Robinhood allows you to invest on margin when upgrading to Robinhood Gold for $5 per month. With M1 Finance, you can invest on margin through M1 Borrow. This is M1's finance M1 service that allows you to borrow up to 35% of your portfolio value with a 3.5% interest rate, 2% interest rate if you upgrade to M1 Plus. I also want to talk to you about other investment broker options. When we were digging into the research, and we came across with a lot of interesting things when it comes to these three players. So while understanding the differences between Webull and Robinhood and M1 Finance is important when determining a brokerage firm to go with, they are not your only options, and you have to be aware of that. There are other players. There are other great brokers that you might want to consider. And here are three that we want to show you. And we have actually compared and contrasted them in another show. So you might want to double check that show as well. So Charles Schwab. So Charles Schwab is a traditional online broker offering everything from mutual funds to index funds to ETFs, all of that with low expenses. So the fees are $0 per online trade of Charles Schwab funds, ETFs, and stocks. For ETFs, index funds, they have 20 plus top tier funds with expense ratios as low as 0.02%, and they have great customer service at Charles Schwab. What about Betterment? Now, Betterment is a leading robo-advisor offering a low management fee and automatic tax loss harvesting. So in terms of fees, you're looking at the 0.25% management fee plus the expense ratio of investments. ETF investment funds, you have a variety of Vanguard, Schwab, and other index funds and ETFs. And what we love with Betterment is that they provide a tax loss harvesting strategy. So that's pretty cool. What about Vanguard? Just as Robinhood is a pioneer for commission-free trading, Vanguard is the pioneer for low-cost index fund investing. And again, if you're having a long-term view, if you're having a long-term vision in terms of retirement, in terms of your investment strategy, you want to think about low-cost index funding, low-cost index fund investing, because all those fees, all those costs, they all add up. And if you are in an era of compounding, the same way your ROI compounds, your fees are also compounding. So over 30 years, over 10 years, over 20 years, those are 0.1% that they're charging you, that a fund manager is charging you on a yearly basis, can really add up. All right. So so Vanguard is pretty cool in that area, in terms of they have low cost index fund investing capabilities. The fees, they charge you $7 per trade, $0 for Vanguard funds. ETF index funds, they have 20 plus top tier funds with expense ratios as low as 0.04%. And the one thing you ought to know is that they are so good with the low cost index fund that they have an entire team in-house to advise their clients about this investment strategies. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to the final session of today's show. So let me give you, what decision should you make here? So determining whether Webull versus Robinhood versus M1 Finance is right for you depends really on your familiarity with the stock trading and investment goals. It's all about your goals, folks. It's all about what matters to you. It's all about what kind of what life stage you're currently in your financial journey. All three trading platforms that I've been reviewing today have something unique to offer, or you might be better off with a traditional broker like Charles Schwab or a different robo-advisor like Betterment. However, in general, these are the types of users that fit each brokerage best. If you are an advanced trader, you want to go with Webull. If you are a beginner trader, you want to choose Robinhood. If you are more on the passive side of things, if you're a passive trader, you want to choose M1 Finance. And if you don't think you match up with any of the options above, then do some more research on your other online brokerage options and find the right one so that you can start investing today. So our pick, and this was not an easy one, but our pick is Robinhood. And we have scored this company 9.5 over 10. Webull, again, we have scored Webull also 9 over 10. And M1 Finance, 9 over 10. So, sorry, Robinhood is 9.5 over 10. Webull, 9.5 over 10. And M1 Finance, 9 over 10. The reason why we actually scored Robinhood and Webull as a tie is because in our team, we have advanced traders who found the Webull platform excellent. However, we also know that if you are a new investor, you want to be able to understand the basics of the investment world, and Robinhood does a great job at that. In addition, they also offer the crypto trading, which is giving Robinhood a slight edge over Webull. Thank you so much for your attention today, folks. Really appreciate it. I will see you next time. But until then, remember, stay marvelous.